Nobody making a paycheck is paid what they're worth. Create your own paycheck. Thanks for checking in, guys. I'm Michelle Kinney. I'm here to tell you that there is a better way. You can literally create yourself income on a weekly basis selling options, selling puts, selling covered calls. This channel is all about distributing free information. I am trying to help you. You can live the lifestyle that I'm living, and you can do that learning 2 easy strategies: selling puts, selling covered calls. It's not that hard. You don't have to be looking at computer screens all day. You don't have to be day trading. You don't have to have all these crazy indicators on your laptop. No, it's just 2 easy things. Choose a stock that you like, that you want to trade. I'm gonna walk through in this video a few different tickers, and I'm gonna show you exactly how easy it can be. I'm gonna show you step by step, A to Z. I'm gonna walk through everything, and these are the exact same strategies that I use on a regular basis. Starting on Monday, I'm gonna have a free live stream right here on this channel, not only showing how to enter the trade, but also how to manage it. I'm gonna show you exactly when you should close a trade. I'm gonna show you how trades expire, when they get assigned, what you do afterward. I'm gonna show you step by step. If creating some extra cash in your pocket every single week would be beneficial for you, would be able to change your life in a meaningful way, then watch this quick video. Now, before we jump right in, do me a favor, hit the subscribe button in the bottom right-hand corner of the video. Let's jump right in. So first of all, I'm gonna walk through Palantir, one of the hottest AI stocks there is right now. So I'm gonna start with this 12-month chart. And don't worry, because we're not gonna add any crazy indicators. We're not gonna do anything difficult. We're just gonna kind of look visually and see where the stock has been trading for the past year. So you'll see it kind of goes up, goes down, goes up. That's what stocks do. Stocks go up and they go down. When you sell options, you can capitalize on all of those ups and downs on a weekly basis via cash in your pocket. It's so different than stock. When you buy stock, you're just hoping and praying that the stock goes up. Let me jump right in and tell you exactly how you can make a trade on this particular stock. So right now, Palantir is trading at 177.93. The market's closed because I'm making this video on Saturday, but that's where it last traded. This is my Thinkorswim platform. And I'm going to click on the trade tab. And first of all, we can look at these dates. These are expiration dates. When you trade an options contract, you're going to choose what date you want to trade that contract for. Now, I generally only trade contracts that are 1 week in time. Why? Because 2 reasons. Number 1, I don't want to tie up my capital for an extended period of time. And number 2, I want to create myself income every single week. I don't know where Palantir is going to go next month or 2 months from now or 6 months from now. So I don't want to lock myself into that. I just want to look at Friday. So I'm going to look at November 14th. And this is called an options chain. And we'll see there's strikes down the middle, right? The strike is the price at which you're committing to buy the stock, but you only have to buy the stock if it drops below that price before the contract expires right here, November 14th. So because Palantir right now is trading at 177, we only want to buy the shares if it goes on sale. So I'm just going to give you an example. Let's say we want to look at $170 strike price. What that means is if Palantir drops below 170 before November 14th, we're committing to buy 100 shares. Now, if we had to do that, let's say the stock does drop, it's okay because Palantir is a great stock. Now, I'm not here recommending any specific stocks. I'm just giving you ideas on different trades that you can enter and different ways you can make money. And I'm showing you how easy it is to understand the fundamentals, the basic fundamentals between just 2 strategies, selling a put and selling a covered call. So here's how much we would make in premium. So we're going to look at the last column. This is where the contract traded last. And when we see this value, 2.29, that means this. That means that $229 is going to be dropped in our brokerage account right when we make the trade. We don't have to wait for some indefinite period after the stock goes up to get paid. No, we're paid right away. And again, what we're doing is we're committing to buy 100 shares, but only if the value drops below where it is now, which is 177.93, below $170 before Friday. So worst case scenario, we buy the stock that we like on sale. Either way, we keep the $229. Now there's a couple of other things that I look at on the screen. I look at the delta. The delta is the statistical likelihood it's going to drop to that value before the contract expires. So on this particular contract, it's only 24% likely. So it's much more likely than not that it's going to stay above that value, not having to require you to purchase those shares. But again, you have to be ready and able to purchase the shares if you got assigned. I also look at the implied volatility on a particular contract. So the implied volatility kind of gives you an idea of the swing. How much volatility does that stock have? This particular contract has about 67%. That's a pretty high swing. That tells you a couple of things. Number one, the higher the volatility typically, the higher the premium. And as we can see, we're getting paid $229 for 1 week's worth of a trade. Also, when we have high volatility, it gives you the comfort of knowing if the stock does dip down below 170 and we had to buy the shares, we can turn right around and sell a covered call against those shares right afterward. What a covered call is, you're committing to sell your shares higher than what you paid, and you're paid another premium. If the shares don't go higher, you keep your shares, you keep the cash, and you do the same thing over next week. So this, again, options trading is a way to create weekly income. If you're looking for a side gig, a way to make a couple extra $100 a week, this can be a very good avenue for you to do that. Now, I always calculate the rate of return on a trade before I put it in, and I'm going to show you how easy that is. I'm just going to pull up a calculator here, and I'm going to divide the premium that I'm getting paid, $229, divided by the amount of money I would need to make this trade. So in this particular case, this was a $170 put. That means I have to have $17,000 in order to make the trade, because I'm committing to buy 100 shares at $170 per share. So I'm going to divide the premium, $229, divided by 17,000, and we get a rate of return of 1.3%. But again, guys, this is for 1 week. If you do a trade like this every week, you are literally making 70% on your money. And I'm going to give you a bonus right now. You don't necessarily have to put up all the capital. You can use what's called margin. Margin is using some of your money and using some of the bank money. The easiest way to calculate how much margin you need is you would just click on the contract. You're going to right click to analyze the trade, and it tells you here what the margin requirement is. So in other words, if you don't want to put up all your money, the margin requirement on this particular contract is a little bit less than $2,900. Now, if we're going to calculate our rate of return based on the capital required using margin, we're going to come up with a much higher rate of return. $229 in premium divided by $2,900 in capital. That gives us a rate of return of over 7%, almost 8% on our money for the week. Now, I do want to let you know that using margin does have its own set of risks. So in other words, you don't necessarily only want to have, let's say, $2,900 in your account to make this trade, because what happens is if and when the stock goes down, the margin requirement is going to fluctuate, and you want to have enough cash in your account. You don't want to incur a margin call. A margin call happens when you don't have enough money in your account, and then you have to liquidate your trade, oftentimes realizing a loss. But let's say you had $10,000 in an account or something like that, you can very comfortably make this trade. I also want to let you know as well that you want to keep cash on the side in case the stock goes down significantly. You want to be able to sell another put and take in more money, and then if you get assigned those shares, you're purchasing more shares and averaging down your cost on the shares. Now, don't worry if this is confusing. Starting on Monday, I am launching a live screen to walk through all of these every Monday, every Wednesday, every Friday. That way, you don't just see putting the trade on, but you also see, as the trade is already in your account, how that looks, how that price fluctuates. If you wanted to liquidate that trade, what that looks like, how you lose money or how you make money, when a contract expires, when it gets assigned, etc. So if you want to learn more and any of this is confusing to you, don't worry. Join my free live stream and I'm going to walk you through all of those steps. The purpose of this video is to show you how easy it is to just walk through all of these simple steps with a couple of clicks of your mouse. Now, some of you guys might be saying, okay, Michelle, Palantir, that looks great, but it's $177 per share. What if I don't have that much money? What if I want to start with a less expensive stock? Well, let's walk through another stock. Let's walk through Applied Digital. So someone on my YouTube channel had asked me to walk through this stock anyway. It's a data center stock. It's been trending in recent times. And the first thing that we always do is we pull up a 1-year chart and we take a look and see see what the stock has been doing. And we can see earlier on in the year, it was kind of flat, down a bit, sort of went up a little bit, and then it's kind of been on what we call this bullish run for quite a while, since about June. We can also see for the past few weeks, it's been coming down. In fact, it was as high as $40 and now it's only $30, $30.98. Now, I don't want you guys to be afraid of when a stock drops because listen, stocks go up and stocks go down. That is what stocks do. So if you're trading a stock and the stock goes down, don't freak out. Don't worry about that. If it's a good company, it will go back up because over time, stocks of good companies do go up. The only way that you lose money in the market is if you sell your shares for less than what you paid. That will recognize a realized loss. Don't do that. It's okay if you end up having to buy the stock and the stock goes down. That's a paper loss unless you sell it. Again, don't be confused about any of these concepts. Join my live stream coming up and I'm going to walk through all of this with you. Listen, learning options trading, there's only two strategies, selling puts and selling covered calls. But if this is new to you, it will take a little bit of time to fully understand. But once you understand the concepts, you literally only need to take about 15 minutes a day, put your trades in, and create cash for yourself on an ongoing weekly basis. So let's take a look and see how much cash can we make with Applied Digital. So we're going to look at the trade tab. And again, we're going to look at November 14th because we're only going to look at 1 week. We don't want to tie up our capital for an extended period of time, and we want to create ourselves weekly income. So on Friday, this stock last traded at $30.98. So we're going to look at the strikes down the middle. And again, when we're selling a put, we choose the strike price. That means we're choosing the price at which we're comfortable buying those shares if the price drops. You can choose whatever makes sense for you. So let's say, for example, we kind of want to go a little bit far away from where it's trading. Let's say we only want to buy the stock if it drops to $27 or lower. Right now, it's almost $31. So it would have to drop another $4 or so. Well, we can see this last traded at $55. There's a 16% likelihood that the stock is going to go below $27 before it expires. So it's much more likely that the stock will stay above that price, in which case you don't have to buy the shares, but either way, you keep the premium. You keep the $55. Now, this stock has a lot of volatility, 133%. The higher the volatility, the more premium you get paid. Now, let's calculate the rate of return on this particular stock. We're getting paid $55. And if we don't use margin, but we put up all the money, we only need $2,700 to make this trade. That means you can make this trade comfortably with $2,700 in an account. And the worst case scenario, if the stock goes down, you're going to buy 100 shares. If you don't sell your stock, if it continues to go down and you don't sell your stock at a loss, you will not lose money. You may have a temporary paper loss, but a paper loss does not affect your pocketbook. You follow me? So in this case, our rate of return would be about 2%. Guys, you're making 2% on your money for 1 week. Let's say we wanted to use margin. How do we check that? We're going to check that by clicking on the contract. We're going to analyze the trade, and it gives us a margin requirement of a little bit less than $1,200. Now, if we're making $55 and we're only putting up $1,200 to make the trade because we're using some of the money from the bank, we are literally making 4.5% on our money for 1 week. If we do a trade like this every week for a year, we are literally making 238% on our money. Do you see how powerful options trading can be? Now, I'm not here to say, hey, you're guaranteed this or you're going to make that, but I'm showing you all different trades. Listen, I live completely off my income and I've been doing that for many, many years. You can literally do the same thing. Hey guys, Michelle again. How'd you like that information? Was that amazing or what? Can you guys literally see yourself doing this on a regular basis? Listen, it takes a little bit of time to learn options because it's something new, right? If you were gonna learn how to speak Spanish, you wouldn't pick it up like this. It probably takes about maybe 5, 6, 7 hours to understand the basic fundamentals. I have lots of free content right here on this channel. I'm gonna put some links to some longer videos that teach you in more detail. Catch my live stream starting Monday. Once you learn the basic fundamentals, literally it would only take you about 15 to 20 minutes a day. Do you have an extra 15 minutes a day to change your life? I hope this video helped. Remember, hit the subscribe button. I'm putting up a video every day for 1,000 days. Like the video. Tell me in the comments, what kind of stock do you want me to walk through next? Happy trading.